course, let's quickly begin our conversation on the day's topic, which is foreign direct investment. We're looking at the inflow of FDIs into Nigeria in the past few months. And to look at these issues with us on the show is R. Abiola Razak. He is the head of research and strategy at the Associated Discount House. And also we have in the studio Dr. Olufemi Shaibu. He is an associate professor of economics from the University of Lagos. Thank you, gentlemen, for coming on the show. We do appreciate your time. When we talk about foreign direct investments, I'm going to start with Abiola. Many countries in Africa depend on it, or shall I say, they look forward to getting grants. Sometimes they come in as grants to aid growth and development. Let's start off from what's going on in Africa. How would you describe the inflow of FDIs into the continent?
Thank you very much. It's my pleasure being here. I think we need to differentiate between foreign direct investment and grants. We've got capital importation. Within the capital importation context, you have the foreign direct investment either into equities or debt. You have the foreign portfolio inflows, either equities or debt or money market instruments. And of course, we have grants, we have other assistance development initiatives. So those are quite different from foreign direct investment. However, if you have to look at foreign direct investment on its own, I think Africa has actually been a major attractive market for foreign direct investment over the last 10 years. And I must say that particularly it's actually peaked this last year in 2013 at around $56 billion. That's quite impressive, and that also follows what we've seen in other emerging markets. And that's largely because of the slowing growth that we've seen in the Euro area and, of course, the US. So as more and more developed markets continue to witness slowing growth because of the aging population, because of the challenges with respect to population growth and some other factors. And of course, the contrary is what we'll find in the African market. For example, you have the African economy being projected to grow at 6.1% in 2014, following about 5.1% growth that we saw in 2013. This is far ahead of what you find in the Euro area. This is far ahead of where you find in the US and even other developed markets of the world. So in as much as we continue to see that strong growth, in as much as we continue to see a growing middle income class, and of course we continue to see more and more openness of the African economies for foreign direct investment to come in, and of course infrastructure is getting more and more better. We're beginning to have better skilled labor as it is, which of course is another major attraction for foreign direct investment, because you're looking at the opportunities not only from the perspective of the natural resource now, we're also looking at it from the perspective of the skilled labor that will be needed when these companies actually bring in this investment into Africa. So definitely we'll continue to see more and more of that going forward.
Let me come to the professor, associate professor of economics. Why is Africa that attractive? It seems as everyone is turning towards Africa. Most investors around the world want to come into Africa, bring in the money, whether it's capital importation or whatever portfolio investment as the case may be. Why do we look so attractive?
Now, generally, the major factor that attracts foreign investment is the returns on investment. In a country that's just growing, or country that's growing, it's assumed that maybe they have higher returns than the developed countries. And the investors as well, they want to go to where they can get higher investment returns. So African recently now, because of the reforms that are taking place in almost all the countries as well, they are providing incentives that are attractive, better than what they have in their donors' country. So then to move to these areas to be able to have the benefit of the incentives they're providing. And two, that the region, is a resource blessed continent, that we have a lot of resources as well. And most of these FDIs, they flow into these sectors where maybe the local people have no expertise to be able to exploit it, and therefore they know by the time they come and exploit these resources as well, one, apart from having their own, they help at least developing the countries as well. And so most countries in this continent, they tend to see way of partnering with those countries, one, to help them to explore these resources as well, and be able to see a process of transferring technology and knowledge to their people.
Okay, we'll talk about the specific areas of interest to these investors shortly. But I just want to bring you some statistics that I have right here, which is from the United Nations Conference on Trade and Development, UNCTAD. It said that Nigeria's FDI has grown from $1.4 billion in 2001 and $2.1 billion in 2004 to $11 billion in 2009. So we've seen a gradual increase of FDIs. But are we seeing a corresponding, Biola, are we seeing a corresponding development, in the economy or in those areas that these monies are being targeted? Do we see that happen?
I think yes, but I think it's very important to go back to where those flows actually go into, which comes back to what Dr. Shoaib actually said earlier. It's very important to track the trend in terms of foreign direct investment, but it's also very important for us to look at what sectors of the economy do we actually find those investments into. It's also very important to note that in the last 2-3 years, for example, particularly if they actually peaked in 2011, we saw a decline in 2012. 2011, for example, Nigeria actually was the biggest destination for foreign direct investment within the African continent. Unfortunately, last year we lost that rank to South Africa, which now attracts more foreign direct investment than Nigeria. But it's also very important to look at where this foreign direct investment has always been to. It's actually been to the natural resource sector. Particularly in Nigeria, you find a good number of them going into the oil and gas industry. You find some of them going into the financial industry, particularly after the banking sector recapitalization that we had in 2005, 2006. So these are sectors that has less integration with the overall economy and, of course, less impact on the overall populace in Nigeria. But I think it's very interesting to also note the fact that in the last couple of years, particularly from 2010 to date, we've seen a gradual shift, maybe not as much as one would want, but of course we've seen a gradual shift in terms of the sectoral allocation of foreign direct investment. We're now beginning to see more and more interest in the consumer goods space. We're beginning to see more and more interest in the service industry and, of course, some investment in agricultural space. And I think this has more impact on the overall Nigerian economy and, of course, its people. So in my view, I think the more we continue to see this investment in telecoms, in infrastructure space, within the service industry, utilities like power, for example, which I think over the next couple of years will attract more and more foreign direct investment into Nigeria because of the reforms that we've had in the last couple of years. So I think the more we see this flows into these strategic growth sectors like utilities, like infrastructure, like telecoms, like service industry, like agri, like manufacturing, then the more impact we would see in terms of the foreign direct investment impact on the Nigerian economy and its people.
Let me stick to Biola. You talked about that some parts of the economy that are not well integrated into the whole system, as the case may be. What do you think has happened to them?
Okay, I think one thing is the reform. The other thing has to do with the attractiveness of those industries, as it were, from a risk perspective. I'll give you a simple instance of the reason why we've seen maybe slight foreign direct investment flows to agricultural sector, for example, over the last 2 years. And that's because all the stakeholders, inclusive of the fiscal authorities, the monetary authorities, and even all the stakeholders within the agricultural sector have actually come together to partly de-risk that space. Now, because of this de-risking that we've seen in the last couple of years, now we're beginning to see some appetite of foreign investment and even some local entrepreneurs beginning to invest in the agricultural space. Beyond that, I think it's also very important for us to look at what the opportunities like in terms of the openness of the economy itself for these sectors. For example, one of the reasons why we've seen significant attraction in the last 20-30 years in the oil and gas industry is because of the increased openness of the oil and gas industry in Nigeria. You'll actually notice that because of the hanging PIB, which has been delayed for the last 7 years now, we've seen significant slowdown in terms of foreign direct investment into the oil and gas space, and that's because there's an uncertainty in terms of the fiscal regime within that space. Now, once the PIB is passed, my expectation is that we'll see more and more flows again into the oil and gas industry. So you have to look at it from the perspective of the openness of the economy, you have to look at it from the perspective of the reforms within each of the different sectors, and you also have to look at it from the perspective of the risk of each of these sectors, without another government actually helping in terms of reforms, trying to de-risk those sectors and attracting more flows into each of those sectors as they were.
Okay, I'd like us to go into specifics now, Dr. Shoaib. I want to ask you about some of the latest developments we're getting in terms of the inflow of foreign direct investment. Of course, one of that is the Power Africa initiative between Nigeria. I want to believe it's for the whole Africa, but Nigeria is said to benefit more from that initiative. $14 billion is at stake. What does that tell us in terms of infrastructure finance? Because the whole essence of it is to channel the funding to develop infrastructure on the continent.
Really, I think it's a good initiative and definitely going to help us build the infrastructure that we require to even attract more FDIs to the country. I just want to comment something about what Razak just said about the role of FDIs in Nigeria in terms of maybe why do we have a kind of a mismatch between the growth and then the FDI flows. I have this personal opinion that the flows of foreign direct investment to Nigeria has been to service sectors, especially the trading sectors. And definitely, based on economic institutions, when at least the growth of any country is being powered by the consumer spending, it tends not to correlate with growth. And because then you are fueling other people's economy, because the production comes up from some other countries as well, and you only hear just trade. So at the end, there's a linkage to the economy. So the flows of investment in terms of maybe building shopping malls and co in Nigeria, which are added as part of the foreign direct investments, tend to promote the economy of other countries.
Of other countries.
And therefore, that's why there's a gap between where the flows in capital as well and the economic reality in the country.
Now the translation of that inflow into economic realities.
So the partnership now is a way of addressing that challenges. And by the time now they now begin to invest in infrastructures, and then again that can expand the economic base of the countries and create more jobs and empower people. And then a small scale business can come on board, and again the economy will be able to have a better inclusive growth.